All right, ladies and gentlemen, it's been a big day, I know, but this is one that I want you to sit up, get your energy going, because you're going to learn a lot. Get your pen and paper ready. We are going to hear from the Executive Chairman of Martin Place Securities, Mr. Barry Dawes. He's going to have a lot of really good information for you. This is a time that I want you to sit up and take notice. At the end of this presentation, we're going to move to the Zoom room where you can ask questions, and Mr. Dawes will be there. You can ask questions in the chat room. But for now, let's get over to Barry's presentation. Please give him a warm welcome. This is going to be about come along for the ride. The best is yet to come. Barry, great to see you. Thank you so much for your time. It's over to you.
Thanks, Kerry. It is a very exciting time, and has been a very good ride for the last 6 years, but there's a lot more to come, that's for certain. The way I look at the marketplace is that we get excited about the gold price and so on, and the performance of the stocks. But at the end of the day, it's really the industry that's driven all this. The Australian gold mining industry exploration players have done a fantastic job over the last decade. But in the last 6 years, since the gold index bottomed at the end of in 2014, we've seen a 550% rise in the gold index, and we've seen quite strong growth in our gold production. Now, at the moment, Australia is just got pipped out of second position as the in terms of global gold production by Russia. We did 325, and they snuck in with 329. But China, which is the largest producer, is now under 400 tonnes. It was 483 tonnes last year. But I think Australia is going to meet it on its way up, while China's on its way down. And we should become, in the next couple of years, the world's largest producer with over 350 tonnes, maybe 360 tonnes of gold production. So what we've seen is a bit of a roller coaster ride. You might not have appreciated that when the gold price bottomed in 2000, that was almost the peak in Australian gold production. And then for the next 7 or 8 years, we saw our gold production fall quite considerably. And in fact, in WA, it fell 48%, while the gold index itself was up over 550% over that period, but Western Australia just missed out. So Western Australia's improved and got its act together, and it's increasing its output, and we're seeing a lot of activity. Western Australia produces about 67% of Australian gold production. So that's where a lot of the action is. It's obviously a state that's had a long history of gold production, and it's got a bureaucracy that is organised to cope with and assist gold mining and not hold it back as many other jurisdictions in Australia have done. Now, the gold price has obviously helped a lot, but do keep in mind that what we're seeing is growth in gold production, and the performance of the sector and the stocks has really reflected the high professional skill of the industry. It just didn't get there because the gold price went up. It's done a lot of things. It's drilled a lot of holes. It's found a lot of gold. It's produced a lot of gold, and that looks pretty exciting. The Australian dollar gold price is up around $2,700. At the top of this channel, we'll probably see a bit of consolidation here for a little while longer. $1 will probably rise with a rise in gold price. But when we get to the next channel, I think we're going to see a lot more fun. That long-term uptrend is very much in place. Now, the impact on the gold stocks, as I said, in the period from 2000 to 2008, we saw 585% gain before the GFC, and then we saw another rally into 2011, which gave it 750% gain from 2000. We all know that the index fell in a heap, and we bottomed after falling over 80% to bottom in November 2014. And then since then, we've seen 560% rise. And I think that we're going to see a lot more as we go through. So looking at the industry, I have a what I call my gold matrix, where I have all the major gold producers, and I'm able to look at their cost of production, look at their production, look at their costs, and we're able to aggregate the numbers, and you can see that since 2014, we've been able to achieve this 11.5% growth rate, and I can see that continuing for these players over the next couple of years, and we might see a bit more coming from all that. Obviously, there are a lot of other smaller players coming in to add to this, but it's a very good performance by these companies. These are the major stocks, excluding Newcrest. Newcrest is so much bigger than the others, although Northern Star and Evolution are starting to catch up to Newcrest. If we look about where gold is produced in Australia, I guess there's two important areas in WA. One is the Yilgarn, which is fundamental, where we've got Kalgoorlie, and most of the names in Western Australia for gold come from the Yilgarn. When we look up at the Pilbara, it hasn't been very well known for gold at all, but we've got those gold nuggets and different forms of that which are being pushed by Novo Resources, and we've also got the very, very impressive Hemi discovery in that Molina Tabba Tabba structure by De Grey Mining. So the Pilbara will become more and more important. And the other important places for gold production are Victoria, and whilst Victoria has been dormant for 100 years, it's starting to get a bit of excitement now with the discovery of Fosterville, and New South Wales, particularly with the Cadia deposit of Newcrest, that has given it a lot of production. We've got gold areas in Queensland and the Northern Territory, but the main areas are in, as I say, the Pilbara, the Yilgarn, Victoria. That's a lot of that's in the Lachlan, and then we've got the New South Wales Lachlan. The impact on gold production has been really quite impressive over time. The early discoveries were in the very late 1840s, early 1850s. New South Wales was the initial leader, but that was very quickly overtaken by Victoria, and Victoria really was the world's largest gold producer for a lot of the second half of the 1880s. Western Australia came in with the discovery of Coolgardie in 1893 and Kalgoorlie, 1892, and Kalgoorlie in 1893, and we saw very strong gold production that took Australian gold production to over 100 tonnes a year, and it peaked in 2005. The cost structure increased with inflation. You can appreciate we had a fixed gold price, so if inflation was running, the gold price fell in inflationary times, and in deflationary times the gold price rose as the cost fell relative to the value of the gold. As I said, after the 1920s, Australia was pretty dormant with producing only 20 to 50 tonnes, and in the early 80s, when the gold price started to really run, we were only producing 20 tonnes. Now, the Australian Gold Index gold industry did some wonderful things over that next decade, and took gold production from just 20 tonnes to over 300 tonnes. Now that is a dramatic and very impressive reflection on the gold industry in Australia. A lot of that was easy gold in the sense that it was near surface, it was oxidised, it was amenable to carbon in pulp processes. But after the decline that I mentioned after 2000, we have resumed our production, and just knowing the way the gold industry works, and what I'm seeing now with those hundreds of gold explorers and developers out there now, I'm sure that our our idea of 350 to 360 tonnes a year is going to be well exceeded, and Australia should become the world's largest gold producer in the next couple of years. I think this is quite a dramatic production graph, and just shows the impact of the approach of the industry. Now, we mentioned that New South Wales was becoming more important, producing around 40 tonnes. Most of that's coming from Newcrest, although now we've got a number of other projects within New South Wales which are adding to that, so we can expect that to grow, and New South Wales to increase its overall share of Australian output. Victoria, it was indeed quite dormant with very, very small production, but the discovery of Fosterville has pushed that up, such that Victoria is now producing about 7 or 8% of Australia's gold production, and we can only expect this to increase over the next decade as the explorers in Victoria are now funded. They've got good exploration concepts. The understanding of Victoria is far better, and I think we're going to see some really interesting stuff. In terms of what's driving it all, it's those exploration dollars. The exploration money spent means gold found, and we had a new high of gold exploration in 2019 of over $1 billion, and we peaked at an annualized rate in the December quarter pre-COVID at $1.21 million per annum. Now, if the finding cost is about $50 an ounce, that really means that we're going to be finding about 20 million ounces of resource every year. Now, in the Yilgarn, the conversion rate from a resource into a mining reserve is still only around 50%. But when you net all this out, it looks as if Australia will be able to maintain its reserve base to meet production of 350 to 360 tonnes, which is about 11 million ounces. So the gold industry, the explorers are doing really well. So what we're seeing, first of all, if nothing else, it's some deeper drilling. Historically, most of the drilling has been less than 100 meters, and very, very little has been deeper than 200 meters. This is just an excerpt from Evolution, and it shows this position very, very clearly. We are drilling deeper, and we're finding more gold, and some of it is quite high grade, depending where we are. But it's a new generation of activity. It's not just looking at the low grade material, and that's this is Evolution's projects, Mungari projects, which are west of Kalgoorlie. Now, not only are we going deeper, we're going into new areas, and whilst the Yilgarn produces over 60% of Australian gold production, the Pilbara is becoming more important, and this Molina Gold Province that De Grey is driving is very, very impressive, and I expect to see well over 20 million ounces coming from this province over the next 4 or 5 years. Everything that De Grey is touching is turning to gold, and so it's a very, very exciting opportunity here. And DGO has given us this graphic, which shows the Yandal belt against the Molina belt, and changed the orientation, but basically gives you some idea of the potential there. The other thing which is really important is Victoria. We've seen a real boom underway there in terms of people getting land, tenement holdings, and there's really good exploration work being done by Catalyst and Chalice. Fosterville is producing the goods. many people would be aware of that December quarter 2019 where Fosterville produced 190,000 ounces at 49 grams, which is an extraordinary output. And we can see that mine producing 600,000 ounces.
Barry, can I just stop you for one moment there and ask this question? Because there's a lot of people here listening to us today that are first timers to this. So when you mentioned 49 grams per tonne, if you could just expand on that for people that are listening and watching today that have never had exposure to gold equities and that understand that there's an opportunity here, but they're not quite sure how to interpret what you've just said, if you wouldn't mind.
Well, if you look at most of the gold mines in Australia, where you've got an open cut mine, it's probably going to be 1.5 grams. Where you've got an underground mine, typically it's probably going to be 4 grams. And it's important to understand that at the moment, with the $2,700 for an ounce of gold in Australian dollars, that works out to be about $80 per gram. So if you're mining 1 gram material, there's $80 of revenue in there, and you hope that your costs are going to be less than $80. Now, for most people, their costs are well under $80 a gram. But underground mining with 4 grams means that there's $320 per tonne of revenue per tonne of ore. So you've got to keep your mining costs and your milling costs under $320, and for the most part, people can do that. So they're making very good profits. When we come to someone like Fosterville with 49 grams per tonne, that's basically that's $4,000 per tonne of ore, and you can make a lot of money out of that. So high grade means very, very profitable mines, and the history of Victoria has been high grade mines. Over 60 million ounces has been produced from the Bendigo zone in Victoria, and where we've had underground mines, a typical grade would be 15 to 20 grams historically, even though we haven't really produced anything since the 1920s outside of Fosterville. So the potential as they revisit these high-grade gold fields is that we'll get high-grade deposits that should be very profitable, and give very good returns to shareholders.
Thanks, Barry.
So what's going on in Victoria is really very, very exciting. Fosterville's changed the whole approach towards Victoria, and the geology in Victoria is very, very different to what we have in Western Australia. Western Australia is Archean rocks, which are 2,300 to 3,000 million years old. What we have in Victoria are Lachlan Ordovician, Lachlan Fold Belt Ordovician sediments that have been compressed, and we've got a lot of faulting, and we've had fluids coming in to provide gold deposits there. It's a very, very different style of mineralization, needs very, very different exploration techniques and quite different mining techniques to what we see in Western Australia. But the industry will sort it out, and I'm sure we're going to find some impressive results as the companies that are involved in this, the Fostervilles, the Catalysts, Chalices, Kalamazoo, Petrotherm, Navarre, and we've got a new listing called North Storm Minerals coming on the boards very, very soon. So Victoria's a hotspot, and it'll be very exciting for Melbourne. Marvelous Melbourne was really built on the gold discoveries and gold production from Ballarat, Bendigo, Castlemaine, and so on, and all those magnificent buildings have been funded by gold. So everyone should be encouraging the gold mining industry, because that's where you create a lot of wealth. So moving on, going back to the way the ASX Gold Index has performed, what we have is a new all-time high in this index. I'm always critical of the indices because they've been quite inadequate. This index was started in 2000, but it was backdated. Actually, started in 2004, just been backdated to 2000. When we made our peak in 2011, Australian gold production was looking pretty miserable. So it didn't really reflect the industry. What we're seeing now, though, is a gold index that's rising, and it's reflecting the Australian gold industry. And whether we're talking about gold production or exploration, and that index is becoming more and more important. Firstly, as Newcrest gets diluted and as new players come in, and it should be a very, very exciting index. Now, if we look at this, markets are interesting animals. They reflect people and the participants. The highs in 2011 were matched in August 2019, and we had the pullback for the COVID concerns. We've gone up to make a new high, and we've come back to support on this 8,500 level. This high was 8,499. This high got through to 8,700, and we made up to 9,888 as the high. Just a bit of consolidation around here, but we've come back to do a perfect test. But those technical people should note that really there's a neckline through here, and this is a shoulder. Here's the head, and here's another shoulder. And if we look at the potential for that, we're looking for this index to rise, in my view, 200% from that 8,500 level. So it gives us a target of about 25,000 within 2 or 3 years. Now, some of the things that are driving it, if we look at the individual companies, this is what a company like Northern Star has been able to achieve, to in a period of 10 years, to go from 45,000 ounces of reserves to 6 million ounces of reserves, to go from a handful of resources to 23 million ounces. And that's been done by astute acquisition, but most importantly through a very strong leadership management to give us that gold production. If we look at its profile, we'll see this company producing over 1 million ounces over the next few years, over that period, and then we'll get the super pit coming in for their 50% share. So we can see continuing production profile growth in companies like this. And as they go overseas to acquire things like Pogo, we actually end up with a company that's international in its status, standing, and in its operations, and it's a market leader. The other thing the industry has done is provide growing profits, and more importantly, growing dividends. Now, I've been saying over the last 5 or 6 years that people should be holding gold stocks for dividends rather than banks. And I think that's sort of proven it. And it's very interesting to see that Warren Buffett announced over the weekend that he's bought $500 billion of Barrick and sold his bank shares to fund it. So it's nice to see that we're ahead of Warren Buffett.
And you know, Barry, we actually heard from Jake Klein earlier today, and we spoke about the dividend, and it's really great to see companies like Evolution giving a fully franked dividend.
Yeah, and this is just going to continue. These companies should be paying about 60 to 65% of their earnings as dividends, and most of them will be fully franked. So the shareholders should continue to benefit from a rising gold price in US dollars, A dollars, and rising gold production profiles. So the upside in these stocks, I think, is still very high. What Evolution has done following Northern Star into North America, it picked up the Red Lake deposit in November last year. It was 7 million ounces on acquisition. They've increased the resources by using Australian mining techniques and resource assessment, and now that's 11 million ounces. So that's it's been an outstanding acquisition, and we really look forward to seeing them produce at higher rates from this very, very high grade deposit, which is very significant in Canada's history. Newcrest is another big stock which has had excellent exploration results over the years on big projects. It's continuing to look at big projects, whether in Australia and overseas. It's got North American exposure as well as in South America, and this new Haverion this discovery up in the Patterson Ranges near Telfer is very, very exciting. So the industry is doing it, the companies are doing it. We've got one really good ride in the gold stocks, and the gold price itself, it's doing it, and it's coming along for the ride. It's important to understand where we are in the gold price history. This long run from 2000 to peaking in 2011, and then giving us a very, very long period of correction. But this has moved up. We've gone up to a new all-time high, and I like to think that this is just a consolidation halfway pattern, and we're going to see a gold price way up here over the next few years. Now, the main reason for that, in my view, is rising global prosperity. Lots of reasons to be considering gold as the metal of crisis, but the people buying gold at the moment are people in the United States. Their prosperity is rising there despite its short-term issues, and the prosperity that we've seen in China and India and the Middle East has been the driver for the absorption of whatever gold inventory is available. Of course, the central banks are buying it as well to keep the market tight. So, thinking about the ride and just looking at it in the longer term, here's a 100-year chart for you, and there's lots of targets in here, well above $2,500 and $3,000. So I think we're going to see $3,500 within 2 years by middle of 2022, and it's a big. It's been a big ride so far, but the best is yet to come. So, hope you're going to be on board.
Barry, thank you very much. Is that that's the? If we could just is that your end of your?
Yep.
Go. That's how you get a hold of Barry at the moment. Wow, what a day we've had, Barry. It's been a big one. We'll stop screen sharing so I can ask you a couple of questions, because I do know that right now we have a lot of people watching. We have over 500 people watching us at the moment and listening to what's going on. But a number of these people, when it gets into the mainstream media, when you've got low interest rates and when you've got people saying, what do I do to protect my wealth? And this is why people are starting to look at gold. They see the price of gold rising. And I'm often saying to people, I don't want you to look at the price of physical gold rising. I want you to look at your purchasing power of your, what I call funny money, is actually lowering. What advice would you give to first timers, I guess, in this space, in investing in either gold equities or physical gold, and how do they do their own due diligence in this sector?
Well, the first important thing is to be in the market, because it's a bull market which I think has got many years to run, many years indeed. And what we've got is an industry which is reflecting the higher gold price and the opportunities in terms of exploration and development. So you need to be in the game, and the best way to do that is to have a portfolio of gold stocks. You might want to have a few coins, but you've got to store them, and you can't think of them as trading vehicles. You've got to think of them as investments or insurance or whatever, but don't think of gold as a trading vehicle. Don't think about futures, because unless you experience, you're going to lose. So the best thing to do is to get rich slowly, and the best way you do that is to have a portfolio of gold stocks, the big ones, some emerging stocks, and a few speculative things. You'll find that you might have 5 quite speculative stocks. One of them might make you 50 times your money, and the others might be dogs. In the sort of second line stocks, you should be able to get 3 out of the 5 right. And then the big stocks, you know that you've got earnings and dividends. The dividends are going to be really, really important because, as you saw from Evolution, they paid $286 per ounce of production as dividend. Now, that's a really interesting measure. Kirkland Lake just recently was paying $685 per ounce of gold produced as dividend, by the time we take into account buybacks. So these companies have got to pay their earnings to their shareholders in the form of dividends, and they're going to be very, very impressive over time. So make sure you have the big stocks, have some medium size, and have some speculative things, and just don't chase things, and don't think that you want to get rich tomorrow. Just get rich slowly.
Get rich slowly. Barry, let's just talk very briefly before we've run out of time. You've got a background, you've been in funds management, you've got a geology background, you understand so the money side as well as the geological side. So right now, if some people that are a bit nervous, can they come to you and you can give them a little bit of help along the way? I mean,
yeah, well, we can do that. Education in this market is very, very important. What we've seen over the last 3 or 4 months post-COVID, as the gold prices has moved higher, and as people have seen that central banks want to bail everyone out, so the economic risk is perceived to be reduced, they've become more speculative, and we've seen a lot of money raised in the industry, which is very, very good. But we've seen a lot of new players. There's a couple of hundred, probably 300 gold stocks out there. It's really hard to...
And you've only heard from 14 today, ladies and gentlemen.
Yeah, so there's a lot, and some have got experienced management, and some have got very good management. Others have got very young but dynamic and forward-thinking players. So, but just make sure that you find people who are either driven, obsessive about what they're doing, or experienced and know what they're doing. So this is very, very exciting. This bull market we've got for gold, and a lot of people are going to significantly increase their wealth.
Barry, you were talking about management just before. I think it's really important that for people listening today, they understand that you can have the best asset in the world, but the wrong management can become a duster very quickly. How important do you put management down in looking at, and also, do you think it's important for management to have what we call skin in the game? In other words, they are not just being given shares, but they are actually investing in the company.
Oh, look, it's the management is the key issue. But keep in mind that there are different styles of management, and some managers have strengths in areas that others don't. Geologists are great visionaries, because they have to be. That's what they're taught. They've got a whole range of disciplines to look at. Mining engineers have got a project in front of them and they're focused. It's always good to have a balance. It's usually not a good idea to have too many geologists trying to run a mining operation. That generally doesn't work. And likewise, having too many mining engineers on an exploration plane usually doesn't work.
No.
So you've got to work out, has the management got the right balance? Are they driven, obsessed? Have they got skin in the game? And are they living their story? And if they are, you can feel pretty comfortable.
Barry, any last comments before I move on to just our final closing comments before we go to the Zoom room? Love saying that. Because as I said, there's a lot of people that are putting money into the gold industry right now, and some of them just don't know what they're doing. What's your 3 top tips, especially for people listening today, as to how to protect their wealth and not just throw it out there hoping for the best, and stop treating this like a casino?
Yes, well, I think, look, we've talked about the 3 leading gold companies, and you can probably add Saracen and Regis to that. So just make sure that they've got one of those. And we've talked about some other stocks like De Grey, Chalice, Catalyst, there's Bellevue Gold and so on. There's a second line of groups that have capitalized from about 400 to almost $1 billion. So, you can have 2 or 3 of those. And then there's just hundreds of others, but just make sure that those guys are a smaller part of your portfolio than the others, because we all want you to gain wealth slowly. Sometimes you'll be able to pick one that might make you 5 times your money over, or 10 times your money over a very short period of time. But the problem is that if you've come in, bought that, done really well and sold it, you've got to go and find a replacement. Now that might sound silly, but if you go back and look for something to replace it, you might be increasing your risk, looking at lower quality projects. So it's always important to have that basic core position in those big stocks, because you're going to make hundreds of percent gain in the big stocks over this bull market, and that should satisfy most people, particularly when you've got dividends coming. If you want more risk and racier things, you're going to lose money.
But you can also make it as well. I mean, we've heard some fabulous stories today, and we've handpicked quite a number of them. And the good thing is that all of those people that you've heard from today, ladies and gentlemen, are going to be in the Zoom room in order for you to ask questions. And let me just tell you right now, there are no dumb questions. If you think you're a first-time investor and you're not quite sure, ask the question. Because for the next hour, once we finish here, we're about to go to the Zoom room, we are giving you the ability, all of my speakers are going to come in, they're all giving of their time freely to you. And I always say to people, the best way to get educated is to make sure that you ask the right questions and there are no wrong questions. That's a view I have. But I've known Barry for quite some time. He has been calling this market for a number of years. He saw it coming. He doesn't want you guys to be late in the game, but he also wants to make sure that you are cautious with where you spend your money. But as he said, have some in the large ones and some in the medium, and then you can speculate a little bit as well, because that's where you can make huge leverage to the gold price. So I think that's important as well. Barry, we're going to move to the Zoom room now, and you'll be joining us, I assume?
I certainly will.
That is great. So, ladies and gentlemen, if you haven't already, you should have received an invitation to the Zoom room. You must register. We cannot let you in unless you have registered for that. It's your opportunity to ask of all the speakers today. I hope that you found today valuable. We certainly do respect your time, and we hope that you learned a lot. And in the next hour, we hope that you engage and ask lots of questions of all our speakers today. And as a finish, before we go into the Zoom room, I would like to just thank all of our speakers today at the virtual gold conference. We hope you enjoy it, and we'll see you in just a minute. We've got to switch from this room to the next room. Barry Dawes, thanks so much for joining us today.
Thanks, Kerry.